Good evening, traders. Good evening, traders here. It is Nathan Together Trading here today, guys, for the Monday breakdown. Just going to give you a run-up of the week, see what's going on, potential trade ideas, macro data coming out, just so we're all aware of what is going on in the market, guys. Now, I'll start off with the dollar, as I do every single time. And I just want to point out here, we are in a bit of a sticky zone. We haven't actually been able to break past this crucial, infamous 92 level. I actually anticipate a bearish week this week. I anticipate price to come back down. Well, we've got a couple of scenarios. Either we're going to stay range bound, stay within this 91 and a half sort of region, stay in this sort of range, or we're going to get a half decent dip down to this kind of region here. We might even breach and spike down for to touch this trend line here, guys. Expecting bears this week. Clearly because of the price action, guys. This price action and the euro price action is telling me we're going to have a bearish week. We cannot seem to be breaking the highs here. We aren't actually closed above 91.90 yet. Multiple rejections. We can't seem to close, and that's not an issue. It just means we need to grab some more liquidity before we can make the next move up. Because, guys, look here, it's a substantial move. Really big move, guys. So we're going to need some big liquidity to grab. And don't get me wrong, we've already surpassed here. So if we can even stay in this range, that'd be so well. Even if we can stay in this range, it's fantastic. But I can see a dip down, which is no problem. We can add to our long dollar positions anyway. So it's no issue whatsoever. And some of the price action occurring as well, it's actually could work out really well. But yeah, that's what I'm seeing for the DXY at the minute, guys. Rejection here, move down here, maybe even a breach of this, maybe even a spike here in extreme conditions. Listen, there's no issue either way. It's no issue where we reached the 92. I was expecting some sort of exhaustion after that. If we didn't see a huge dump instantly, which we haven't, which is good. But let's have a look at the Dow Jones Dollar Index here, guys. So you can paint another picture. Looking exactly the same here, really, guys. A little bit more range bound here, but guys, same story, same story. Same story here. Still bullish, guys. As I keep saying, still bullish. Just we're going to have a bearish week, I can anticipate. Macro data wise, let's get on investing.com. Let's have a look. I think we got that. I looked at it earlier. I don't think we've got much going on this week. Not much to talk about. I know we definitely do have the GDP on Thursday, which, to be honest, guys, it's already priced in. GDP's already been priced in. That's why dollar's been very bullish, and so is the bond yields as well. It's already really priced in. But we had the Fed, we had Powell speak earlier. Much too short to run on earlier. With the existing home sales earlier. Slight miss. Nothing to talk about. More FOMC members talking this week, but let me see what else we got. New sales home, yep. Sorry, that's tomorrow. Nothing special there for you FOMC members. Core durable goods, well, that's not really much of a market mover. Only Fed Powell testifies there, I'm not too sure about that. The GDP and the initial jobless claim. Now, what I'm expecting, guys, to see how price develops that day for these, because jobless claim is always mover, and so is GDP is not necessarily mover because it's normally priced in, but we're looking for these near misses and near hits. But expect to see some nice price action either the start of this day or the start of the following London session. Either London session on the Thursday start or the London session on the Friday, guys. Let's see how price action acts before and after these kind of macro moves, guys. Maybe after this, maybe before this, guys, we can actually get to anticipate. We can actually get the lows of our dollar. Maybe we can see some bulls after this. I can imagine. Well, The forecast is low. These forecasts, they don't mean much. It's near hit or near miss. I've said this multiple times. Doesn't really mean too much. And GDP is already priced in. So really, we should look at how price will be before and after these sort of sessions. That's what we're looking for. Now, before I go on, let's have a look at the 10-year yields before we move on. Ten-year bond yields. Now we're up and away. We've gone past the first target, which is 1.5. I've seen hints about they're trying to reach the bond yields are going to inflation expectation levels, and I think that's about 2 or 2.5. So really, we can see bond yields moving higher. This isn't good for the stock market. It's good for the dollar, which is good. So we really care about the minute. But yeah, I expect this bullishness to continue, guys. America is in the growth stage, real boom. Macro data is looking fantastic. Yeah, they're real contenders at the minute. So I can see, unless we get some Fed intervention, which I wouldn't really put past them, but I can imagine prices keep going on. Really, the next regions too, guys, the big two, that'll be a very substantial level. Hasn't been there since mid last year, so that'll be substantial. Really, really, really big level. That's all about the US stuff for now. Actually, no. Let's look at the S&P 500. Actually, so let's look at the S&P. Still bullish S&P. Very, very bullish S&P. I can see us getting to 4,000. Now 4,000 is my level. After 4,000, I'm not too sure, but I'm bullish. That happened this week, to be honest. I'm bullish until then. After 4,000, let's just see when we get. Let's just not get ahead of ourselves. But 4,000, my next target. So yeah, I'm bullish, guys. Bullish to 4,000, 100%, 100%. The yields aren't moving too crazy at the minute. So as you can see, we're having a little pullback here, which is definitely good for the stock market at the minute. So this little breather is going to do well for the S&P. And go definitely guys, this 4,000 target, which I've got, is pretty much been hit. I wasn't really, but I want a real touch of 4,000. Then I can anticipate some next moves from there. Anticipate where the bond yields are and just anticipate from there, because it's not just easy to look at the stock market and seeing where we're going to go from there. But yeah, guys, that's how I'm seeing for the US market at the minute. Bullish stocks, bullish yields, and bearish dollar. So that's what I'm seeing this week. Now let's start with the euro. Euro is looking very interesting to me. Very, very interesting. Now I'm excited. I'm anticipating a bullish euro this week. Definitely, I can see us. Well, we're sort of range bound at the minute. Slightly range bound at the minute, but I'm anticipating price to come back up to here. Well, basically, I'm looking for a touch of the 1.2 level. That's my next target. We could overshoot that easily. Come down to 2.03 here. This sort of region here, I could see that happening. But could definitely see that happen. That's what price action's telling me in a minute. We're definitely looking for a next leg higher. I can see basically what I'm looking at. My first target is 1.2. Then when this high gets broken, I can anticipate the next leg up, which is around here, around this kind of region here. So that's my short-term target, really, guys. Don't get me wrong. I'm bearish. I'm very bearish euro, guys. Very bearish. But this is what price is telling me for this short term right now, guys. That's what I can see. So for the macro data, we got a few bits of German news this week, which is obviously going to be the main movers. We've got the PMI. Don't get. Oh, also, guys, I forgot to say as well, Germany have just gone into their third lockdown as well, guys. So, obviously, none of this data will be priced into any macro data now. It'll be in a few months' time. But I just want to let you know that we could see some bearish euro movements just on the back of that. So, just play a safer euro. But so what we got? We've got, where's Euro? German manufacturing PMI. That's a fairly big one for Europe. So see where Germany is, and then manufacturing sector. See whether they're on target. Because I'll be honest, I expect that to be a miss. Eurozone and Germany are very, very slow in their recovery stage, so I don't expect anything special to come out of this. Where are we? Lagarde speaks on Thursday. Expect some good price action from there, from here, and the dollar going in and out of this meeting as well. So Thursday is actually a big day as well. Obviously, we've got the US GDP as well. So yeah, Thursday's London session start, and Friday's London session start should be very interesting. Very, very, very interesting. And yes, we've got the Germany LFO, so IFO business climate as well. I'm not really too sure what that was about, but it's some sort of growth business climate and measures expectations for the next 6 months. Okay. So yeah, just another indicator we can use is how well the Germany doing on growth, really. So yeah, that's what I can see for Euro at the minute, guys. Let's have a look at the few Euro cross pairs and see what we've got going on here. Euro pound. I can see some bullishness, mate, potentially this week, only because we're just at the low. We've got a little bottom impact pattern forming here. Put a trade into the group, we're in some profit there. So what's a break even? I'm just gonna let that run personally. As you all guys know, I'm very bullish pound and very bearish euro, but I mean, you've got to take a chance of that in your common simple price action here. Don't know how long we're going to last out of that, but yeah, that's what I can see on that. Euro Swissy, expect a continuation up from there. Definitely next leg up on the Euro Swissy. Euro CAD. I expect any risk pairs, Euro CAD, Euro AUD. Maybe not Euro AUD because of their central bank, but that's a different video of mine. You should have a look on that on YouTube. It's a central bank diversion video. But Euro CAD, Euro NZD, I expect these I expect these risk moves to the downside to continue on 100%. Their central banks looking good and healthy. And we've got risk in full flow as well. So probably a bit late on the CAD move, on the Euro CAD move, but I expect some we'll probably get a pullback here, but I expect price to continue coming down. Sorry, that's a bit of a tongue twister there. I've got legs coming up higher here, but I mean we're in the growth stage, guys. So I do expect price to be coming down. Definitely. Euro JBP. Very interesting. Probably continuation, really, because as I said, we're in the growth stage. So JPY is not needed, and no investors are piling into JPY at the minute. So I could expect price to continue up to this level here, 100%. Now, next you got the big boy, my favorite pound. Start from the weekly. As you can see, we had the big move up here. This is when we had the US dollar start to get a bit strong, but you can see it hasn't really faded the pound so much. We're actually staying in this range. We haven't actually dropped below this pretty crucial Feb level here. We haven't actually closed below here. If we're going to daily, we're range bound here. I expect pound to have a good week. Price action wise and macro data, pounds is looking really good so far, but we've got a very, very big macro week for pound. So I'm anticipating pound to come and touch top of this range here, the big boy 1.4 level. That's my next move on pound. It's difficult because we've defended this level fairly well, but I think if we get some weak macro data coming into pound, we can fade this level out. But it's not to be worried about as well because macro data is looking really good. Their central bank's looking really good. And we've got Brexit out the way. I know we've got a few little slight bits of hiccup talk about Brexit now, but we've got the main bits of Brexit out the way. We're coming back strong. So pound's not enough. I'm very, very bullish pound, but and I anticipate us to stay in this range, to be honest. I don't anticipate us to break lower. I really don't. But if we do, it will be because of macro data coming out, because we've got a big week on macro data, which we're going to have a look at right now. Tomorrow we've got average earning index, claimant count change, employment, big start. Bad Bank of England speech isn't from Carney, but it's from other members. We got Bailey speaking tomorrow as well. Didn't realize that. So it's a big day tomorrow. We've got CPI, which is inflation, which will be fairly big. PPI as well tomorrow. Another big day. Thursday we got Bailey talking again. And then Friday we got retail sales, which is a very, very important pound. A very big one, a pound. So yeah, that's what we got so far. So we've got a very, very big week in pound, guys. To be honest, I expect this level to hold. I really do. I expect this level to hold big time, especially with the weak dollar as well. I expect this level to hold. We've defended this well so far. I anticipate to carry on. First target, 1.4. If we break across, then it's clearly up to previous highs. Then we're up and away, guys. Up and away. But also as well, if we do get very negative macro data coming out of pound, it will show that maybe we're in a sentiment there. The macro data, we aren't recovering as quick as maybe we think we are. So we might see the consolidation maybe carry on for that little bit longer until we see the macro data pick up, or we get some sort of boost either from a weak dollar again, or from positive Brexit claims. Because Brexit is done, we've got a few hiccups here and there, so if they can get sorted as well, that might give pound that extra boost we need. But weak macro data, I expect to dip down here or extra consolidation, guys. That's what I'm expecting. GA, a lovely little swing trade I did. I spoke about it in my other central bank diversion video, which I highly recommend you guys watching. Really, really important stuff there. I expect this move to carry on as well. The Swiss bank, where they want intervention anyway, so they're always going to be weak. I expect this to carry on big time. GJ, expect to carry on. That's going to be a good trade. GN, not really. I don't really trade the pound against the other risk currencies. The only reason being for the GBP and AUD is because of the central bank divergence. But apart from that, that's about it, guys. All right, now we are going to go into just make sure that was recorded. I always have a scare that I'm not recording these videos. Always do that. But next, look at emerging market. Emerging market is one of my favorites, guys, because you must remember we're on a boom cycle, yeah. So in a boom cycle, emerging market that's got the highest yields, the highest returns, and FX are going to be the most bought. And so I want to tell you right now. But also it's the most risky. So when you see a leak in EM, normally emerging markets will be the first leak you see before we hit something horrible or we get some sort of black swan event. So, but what I can see is now price action is really good for me here. This is the emerging market index. So this is just a basket of emerging market currencies. And as you can see here, guys, we've got the bottom in formation on top of a retest. This to me looks healthy as anything. It looks really, really, really nice. I expect a move here up. Just based on price action I'm looking at now. Only issue that I have at the minute, which is why I might be doing my emerging market, emerging markets bias through euro, because obviously emerging markets used for a carry trade, so it's based on high interest rates against low interest rates. Obviously, euro is lower than USD, and also the USD, where there's so many US denominated debts, a strong dollar is double bad for emerging markets, because obviously it's negative on the currency, but also their hugely dollar denominated debts start growing massively, so it's double bad for them. So that's why I'm a little bit cautious with a strong dollar with emerging markets, but we are in a growth cycle, so I cannot let these sort of headwinds phase me, especially if we're only going for 1% risk, guys. I mean, what? So Expect the price to come back. Really expecting this week price to come back up here. Realistically, can't see why not, especially with the weak dollar as well. Price to come back up here. That's what I'm expecting. So I'm expecting a bullish emerging markets on the whole. Look at USD-ZAR. USD-ZAR though, I did look at it earlier, and it looks like to me wants to reverse, which is telling me the opposite of what the emerging market index is telling me. But I mean, if I'm trading this pair solely in what I can see price, this looks like that it wants to go up. To be honest with you, price looks like it wants to come up here. But I could highly be wrong here, especially because we've got the weak dollar. And obviously, we got yields in full flow. So really, emerging USD-ZAR should be breaking these lows here. But I can see some sort of bottoming trade happening here. So I won't be taking this trade personally myself. I don't think so. Things could change. But personally, right now, I'm not going to change only because I've got a few conflicting factors. I don't really want to go long, go short emerging markets when I'm long on the economy, if you know what I mean. So, so a bit of a conflicting parameters, but that's what happens in trading. But to me, guys, it looks like a bottom. It looks like a little head and shoulders pattern, some sort of bottom pattern for me. So this looks like a lot long to me. That's what I can see. Let's look at the Russian ruble. Sort of stuck in a range here. Nothing too much to talk about. The price coming down here really because we're in that range. We seem to be at the top of the range. So okay, six price to come down here on the Russian ruble. Expect price to appreciate. So that's positive EM on the Russian ruble. Mexican peso. Looks like it wants to go up as well, but obviously we are in this little headwind area. So looks like it wants to go up, but it does look like it can stay up. But look at this here. To be fair, with the Mexican peso, this is the key level here. So really, if we're rejecting off here, then that the price to come back down, which supports the same as our other emerging markets I did, which the emerging market index was telling me as well. This is quite similar to the DXY, to be honest. Looks like we can get a little bit weak here. Obviously, this is USD with the Chinese yuan, which should come under the emerging market index. So yeah, I suppose it's all correlated slightly. The ZAR, on the other hand, looks a bit weak, but yeah, that's what I can see so far, guys, with the emerging markets. I'm expecting pretty much the majority of emerging markets to have a good week. That's what I'm expecting. Next, let's get onto the metals. Now, all right, so this is going to work. Come on. Now, we took a short in the group earlier. Stop loss break here anyway, but don't think this trade's going to happen anymore. I can see price come in. I thought price was going to come grab some liquidity down here before moving up because I can see temporarily short term. It's difficult with gold. I can't really see a bullish gold, but I can see price coming up and touching this sort of 1765 or maybe even 800 region. So yeah, I suppose I'm bullish this week in gold. Yes, I am. Yes, I am. Yes, I am. So yeah, I'm bullish gold this week. Definitely bullish gold this week. 80 roll. The first target is 1763. Next target 1800, guys. That's what I can see for gold. 100%. Not much to talk about there either, to be honest with you. Silver, yeah, defended at level. Nothing much to talk about here, really, to be honest. I mean, we're sort of range bound. Nothing much to talk about. I don't. Plus, I could even come down here. I don't know. Silver, I'm not really too game on. Nothing seems too nice to me. I mean, we've got. You could sort of say we got higher highs, higher lows, kind of. You could say that. You could say that, but Doesn't look too appealing to me. I wouldn't trade it, to be honest. Not at the minute. Doesn't look very appealing. But yeah, guys, that's what I can see in the markets. Oh, sorry, let's go oil. Sorry, I forget oil. Oil's an interesting one here. So we've broken out this massive wedge pattern forming years and years and years since 2008. We come back, we've retested the lows here. We've got some bullishness. Now it looks like we're coming back. I'm quite bullish on gold, actually. Oh, sorry, I'm quite bullish on commodities. So I expect maybe another retest here, then a move higher. If we don't already get a move up from this, but yeah, I'm expecting to put bulls on oil, definitely. Maybe the short term for the early start of the week to come down. If it doesn't touch the level here, maybe come down here to mitigate this level, because it looks like to me that level could be looks like it might have got mitigated there. So maybe that level's already been mitigated. Maybe we need to come back down and retest this top of this trend level, then to grab liquidity to move to the next level up. But yeah, bullish oil. So yeah, guys, that's my views. That is my views on the upcoming trades this week. I hope this has helped. And if you're not in the group, get in our Discord channel. It's free. You've got no excuses, guys. Get involved. Have a good day, good evening. Take care.